All right, good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. I'm actually sitting at my desk. I'm not in the studio because the building is having some internet problems. So you know what? When life throws you a curve, you just make a little bit of a different adjustment with the bat. So anyway, we're at my desk. This is where I usually come afterwards, and I trade. So just so everyone knows, I do a lot of work with the networks, with the studio, but really my bread and butter is actually trading. And you actually can see right here, this is the VTF that I call it. Some of you guys are always like, what's the VTF, etc., etc. Well, here it is. A lot of guys talking. You can see our positions that are live positions. So I did tweet out on Friday, remember? I was going to give it to my private tweet, but anyway, it shows like what I'm currently in. And I've been in some kind of portfolio approach for the past few weeks. So it shows I'm in the BIOS, I'm in Tesla, I'm in the little VRX, which is actually up this morning. G-Pro, FireEye, some options, and then I have a little bit of a hedge on. So, when markets have been, kind of trending the way we have, it's good to have somewhat of a portfolio approach. But I know last week, when we lost a little bit of the leadership from tech, you always have to have a reason for what you're in now, and you can't fall asleep behind the wheel, because we did see some breakdowns in some of the leaders, which have just created a different type of trade. So as I sit here and give you a different type of morning call, you'll probably see some traders start walking in, which I do get a little mad because I'm in at 6:30. They start coming in, a little bit closer to 8. So, I feel like we need a little bit more prep than that. So I'll just get to the market. So right here, you have e-signal. So, I have a daily, I have a 15-minute, a 5-minute, all depends on what's going on for the day. So let me go to the daily chart, okay? Here is the spider, this is the SPX, so at this point, you could put it, I'm gonna have to improvise a little bit. You put your little line in here and you will see, here's your double bottom. Here is, the red dog reversal where it held in, and this has been your 8 and 21 day, which has really been, the trend. So there are a lot of people getting very bearish now, but to be honest, you can't get too bearish until we break below and close below the 8 and 21 day. So to start this week, I think, you have an important level here, right around, this is 2081. So 2081 is support number 1, a break and close below that, and then here is your 21 day. And if you remember, we were banging on that 21 day around 2040, and it didn't break. So with the Fed this week and some loss of momentum, who knows, maybe it tries again. But again, that's where it has to get through first. So you could see, going sideways, you do have a lot of resistance over here, a lot of resistance from last year. So with that being said, sometimes, you do get people coming out of the woodwork and selling. So we'll see if this upper level holds. I did talk to you guys about a lack of, a little less leadership here, okay, in tech, and you'll already see that the upper level in the Qs have already broke. Okay, so question is, will that lead to a down move elsewhere? So this was a support level that did break, and here you're now sitting on this 107.86, which is the 200 day. So at this point, it is on the right side of this trend line. Okay, so the longer it stays on the right side of this trend line, the higher the probability that it might continue down. And some people are already saying that they think that technology is going to put in some kind of head and shoulders pattern where you have the left shoulder, the head, and maybe we bounce up a little bit and create a right shoulder for then a move lower. But again, that's a very forward looking. We're right now on the right side here, and we'll see whether or not this holds. So when technology started breaking down a little bit last week, when you had some weakness in Netflix and some weakness in IBM and Microsoft and even elsewhere, some money rotated into the BIOS, rotated into the banks that were very beaten down, and some of the energy names. So last week I was talking a lot about the BIOS, and I still like the BIOS. Okay, obviously you look at the longer term chart, and some guys definitely got hurt in the last year or so. The trends have been down. It broke here. If you take a closer look here, these are all the different trends that the BIOS broke that you could have made adjustments with. So with that being said, it broke here. Now, remember this little trade here when I said I bought those 262 calls? Well, that was then, and now it's been trading better since. And here is this old support that's probably turning into some resistance. But if the money continues to want to rotate, you probably could see a move, I think, closer to the 300 area. So I think you could still look opportunistically at the bios, and as long as you say, like, remember Friday I said, as long as 283-ish holds, stay with it, and perhaps we do get some money flows, to get back into the upper area. The banks aren't as interesting right now to me, because this is when you had your gap and go from the JP Morgan report. Remember that right here. This was your gap and go on the XLF, and now it's flat. It's flagging above the 200-day. If it stays above the 200-day, it's going to be helpful for the overall market. That's 2320. I talked about the gap and go in JP Morgan. Okay, JP Morgan has been, to me, obviously the best bank, and how do broken down sectors get put back to life? How they do it? With a gap that holds. Okay, here was your gap that held after earnings. Here was your commitment to it. Then it took back the 200-day, and now it's flagging again, and we'll see if it wants to continue up. So if you remember last week, on Twitter, I put in Goldman Sachs. It's done nothing. I might have a little, it's been a garbage stock, which it has been for the last year or so, but maybe there's a setup there. So, Goldman Sachs, which I'm not in anymore, which, maybe I'll look at today. The reason why, it gave us a good trade, or the way I was looking at it was, you had this big channel. Here was big time support. It also gapped up with the JP Morgan report, and then it flagged, went positive on earnings, and look, that was a great 2-day move that we caught. Now it's kind of flagging again. So if it could hold 165 and the market wants to continue to hang in there, maybe ahead of the Fed Wednesday, perhaps it comes up and sees, this 175-ish area. But again, the stair step gets a little slipperier as you go higher. So I would, watch, not all the banks, but, JP Morgan is the leader, and then Goldman Sachs to play a little catch up. And again, this is probably peak week for earnings. The question is, how are we going to react? Last week, lots of stocks went in the penalty box. I'm going to quickly go into high beta tech. Take a look at Netflix first. Netflix has a big hole in the chart. Okay, so it's in the penalty box, which is what I call it. It broke this ascending channel here. It has a big gap, a big hole. The question is, how long does it stay below it? So at this point, we do have a little bit of a lower level support here. So we'll see if it stays down here and continues lower, or does it try and retrace up? So, there was a little red dog reversal on the day after earnings just for a trade, no follow through, and now it's holding above this 94.21. So maybe it gets a little bit of a push. But again, it's kind of broken. Be very careful here. Now Google after Thursday is the same thing, broken. I hate to say, well, I won't say broken, just in the penalty box. Okay, here you had a big gap down. Okay, now the question is, what does it do in this range? I would write down, 730. This is my low here, 730.37, and here's the resistance. Does it hang out in here for a little while and turn lower, or does it try and fill the gap, kind of like what you saw with IBM? That was a nice trade for some. Some people said, oh, you know what? Everyone still loves IBM. Recently it held the 200-day, got above the gap, and now it filled it. So now, while I'm on IBM, we'll see if it continues to hold this to, give you another trade back towards, old resistance. But, when you get a stock that gets put in the penalty box like this after earnings, the question is, does it stay down here and continue down, or do you get a trade to fill the gap, which, typically, is a real good trade for traders. Those gap fills can happen fast because, it's a void. And when you have a void or an air pocket, to the downside, it gets fast, and even to the upside, just like that with IBM. But Netflix didn't do it. Now we'll see how Google reacts, and we also have to see how Microsoft reacts. Microsoft was priced really for a breakout and priced for a great report, and obviously, boom, didn't happen. So now the question is, does it hang out here and and go sideways and not fill this gap and then break the 200-day, which would probably put pressure on the market, or does it hang out in here and at some point get above this spot, give us a trade to fill a portion of the gap? But so you're starting to see a lot of this. Like this turned into kind of breakout and make new historic highs. Because look at the weekly, we're now kind of just hold bigger support, which is down here. So that's a little bit of a change. When stocks change, you change. And last week I tweeted, I said it's going to be hard for the troops to march well past 2130 in the S&P when you don't have generals leading the way. You could have laggard groups getting some flows and things coming off lows and tactical things to do, but you really need stocks breaking out the 52-week highs. You need things like that in order to create the excitement for a real move versus just back into the range, which is now being some resistance. So, we do have Apple this week, and Apple is not acting so well. If you remember, it gave us a nice little trade here, okay, when it broke above this 98. This was when I started to get constructive on Apple again right there, and then it held. Okay, and then on this day, remember that Friday I got stopped out, it lost the 200-day, lost the 8-day, broke this trend. Well, I've been out. Okay, now the question is, can it hold this 104 area as it heads into earnings on Tuesday? And there's lots of talk, lots of numbers being brought down for the iPhone. So the question is, has it come in enough? Because if you also look over the course of the past 2 years, Apple has done, almost nothing, or lower. This is, remember that upper channel you had here that broke to the downside, and then you had this trend here that broke to the downside. So really overall, still, just doing a whole lot of nothing. And wow, this macro pattern still doesn't look so hot. You have a left shoulder, a head. This could have been the complete of the right shoulder if the numbers are that bad, but I guess we'll see. I'm not in Apple. I've been trading it a little bit. We got to see what the buyback they do, and what they look at for the iPhone 7. As far as what else are we looking at this week? Some of the smaller names made a move. That's why you see a FireEye on there or G Pro. Like, I'm just trying to find little things with a day one that could have some continuation. And if you look here, you'll see, this stock's been, annihilated. This FireEye, it's been horrendous. We pretty much stopped covering it when it broke this and got below the 200-day. But now you have this channel here, okay, and it woke up with a nice upgrade on Friday. That's what got me back in it. And now, if you look close up, the question is, do they want to take, something that's now been accumulated for 3 months and bring it out of the range? So that's why it's on my radar. G Pro has also been gross, horrendous stock. It's got absolutely annihilated. This, you look at a stock like this and you'll see why, my rules are so good, because once you break below the 200-day and the 8-day, there's no reason to be in it. Okay, and boom. So now down here, maybe there's a tradable setup. So that's what I'm looking at here. It's kind of hanging in there, holding above the tactical trend of 8, and maybe if it were to get above this 1435-ish, it sees some kind of catch-up move. But again, it's a broken name. It's something not to, really go with. What I am looking at, I think, on a different note, is this Tesla. I think this pattern overall looks really good on a macro sense. Okay, first of all, you had your V bottom. Now it's been holding here. Last week there was lots of notes and bears trying to attack it, and it did not go down. So now the question is, can it take out this like 255 area, get back to here, and make new highs? We'll see. Those reservations were really awesome for the cheaper car. And overall, you look at this chart here, this macro chart, and it's now hovering back up into this resistance area with a whole lot of shorts in there, and it's really not really a concept play anymore. A lot of people said it was a concept play only for the rich and et cetera, but maybe not. You have this big channel now. This got a lot of people out when it broke this 200. Okay, made this V bottom, and now it's holding here. The longer it holds here, if it happens to have a really good earnings report and et cetera, now what you should do is, Ron Barron, he's a big-time growth investor. He had a column in Barron's this weekend talking about how he thinks this could be almost like $900 stock, way of the future, Elon Musk, et cetera. And again, it's not going lower. So for me, it was up on Friday. I took home some long, and if it trades above 255-ish, maybe I'll add to that. Let's see here now with why am I in VRX? First of all, look at this chart. Wow, very much better to follow technicals than the big smart guys, right? Look at this engulfing bar here that took out 220 and then this 200, and then this trend here was lost around 160, and then another bear flag went this out. So anyway, I saw some relative strength. I kind of thinking that the new CEO wouldn't be signing on if they're not going to do their 10K. So I have some. It's up like 5% overnight. I tweeted on Friday saying I'm in it. I'm thinking takes out this 38.18 and it could be north of 40. You always have to think about whether or not you have a bankruptcy here or there. But some sales traders I talked to, I've been looking at the bonds, and the bonds aren't pricing in a soon, a SUNE type of thing where it could be a bankruptcy, which it could be. There's a lot of news around this thing. So that's why I felt comfortable. Like, Red Dog, you usually don't take things into events. Why would you take this? I'm like, well, I'm doing a little extra homework on it, and I think maybe there's an opportunity. But you always sell a little bit, and then you hold a little bit. Let's just finish up with the metals. Here you go. Here's the GLD. Still in this upper range, but getting very choppy up here. I bought, I went out a month and bought calls just to have some. It did it here when it looked as if this was going to break out to the upside, and it didn't. And now it's, toying with the 50-day. I think as long as it stays above this 116, it's still in this upper range and holding this trend. But just from day to day, it's just too hard to trade, I would think. There's no continuity. It's not like when you had this move up and then this nice little wedge that broke to the upside before this topping tail, but in here it's just tough. And then we talk about the TLTs. The TLTs, in my opinion, look like they're breaking down. A lot of guys still swear by it, but to me, if you look at the chart here of the TLTs, you'll see that this level broke. It's now below the 821 and 50-day. This trend kind of broke. So to me, it seems like the TLTs are going lower, and that means maybe the Fed starts to get a tiny bit more hawkish, and the banks hang in there, and just got to be careful. So, in closing, it's a Monday. You never know what you're going to walk into. Sometimes they have some technology issues, but it doesn't matter. We just adjust. Same way we adjust with the market. We adjust when stocks come out with earnings that you're not thinking are going to come out. You adjust when the speed changes, composure's changing. And as of right now, the market's been going up for about 11, 12 weeks. We do have some, small cracks in the high beta leadership, but the money's been rotating amongst sectors, and as long as that continues, maybe we stay around here. But again, like I said, without generals, it's hard to lead to all-time highs of 2130, but doesn't mean we're going to just break down. If you want to look at, again, the S&P, I think as long as we hold above 2075-ish, okay, you can't get too bearish. And I've been doing that for like weeks, where as long as you don't get below this, you can't get to whatever. That should keep you in check from pressing bad situations and keeping you more opportunistic. Sorry that Chelsea isn't here with me. She'll be here tomorrow. Maybe I'll grab her for the recap, because a lot of people like to hear what she has to say, but not enough room at the desk for that. Have a great day. I'll see you on Twitter, and hopefully you get my note and it's in your inbox by 8:30 today.